Lecture 12, Examples of Trading Trend Lines. In this lecture, I will show you several examples on how you can successfully trade setups based on trend lines. Now that you have learned how to draw trend lines, it's now time to see how it can be useful in trading. The golden rule regarding trading trend lines is as long as the trend line is not broken, the most profitable trades are those in the direction of the trend line. I mean, you should only seek short trade setups near bear trend lines and only long setups near bull trend lines. Entries for trades can be spotted every time the price pulls back to the trend line. In this chart, a bear trend line can be drawn, which was pretty accurate, predicting swing points in this downtrend. Whenever the price pulls back and approaches the area around the trend line, you need to look for a reversal of the trend line to initiate trades in the direction of the main trend. For example, in this chart, these points here are considered good entries for short setups. Stick to this rule even when the market tries to test the extremes of the trend line, pretending that a reversal is around the corner and that the trend line is to be broken soon. Examine the price action here, where this pin bar represents a failed breakout through the trend line to the upside, which have trapped buyers as well. Remember that most breakouts fail, and that most of the time the market tries its best to keep with the trend traders out and to trap counter trend traders in. And this is so true, especially if the trend is so obvious that it attracts money with the trend traders, making the market inefficient. Because as you know, for every trade to be filled, there must be an opposite trade. For every seller here, there must be a buyer who believes that the price is going up, so that his long trade would be profitable. When a trend line is broken, that does not automatically guarantee a trend reversal. Tests of the trend line extremes can be followed also by trend continuation or range trading. However, multiple attempts of breaking a trend line within short period of time, that making the price sticky to the trend line and unable to go far from it, can indicate that the trend is losing momentum, and most of the time the market will break through the trend line and tries to form a new trend in the opposite direction. To explain this to you, look at this chart, which is showing a strong uptrend which can be projected by this bull trend line. As you can see, the market respected the trend line throughout this uptrend until this happened, where the price has broken through the trend line to the downside. There was several attempts to go back above the bull trend line, but all failed. And eventually, the buyers gave up, while sellers become confident that the market is about to reverse the trend, so they sold heavily, as you can see, sending the price down just after the trend line was broken. But bear in mind that if there are multiple attempts to break through the trend line and those attempts fail, this situation makes those traders giving up trying to break the trend line. Then the market quickly moves away from the trend line and the main trend may continue even faster. But how can we differentiate between fake breakouts of trend line and the real ones that result in trend reversals? The short answer to this question is that you cannot, at least not with 100% certainty. But there are indications that could tell that a reversal might occur. One of the most important signals is the strength of the counter trend bar. The bigger and the faster the counter trend bars are, the more likely that a reversal will occur. In this chart, the market was trending down and the price was contained by this downtrend line. Then the price broke through the trend line with series of strong bull trend bars just here. This broken trend line, along with the strong bull bars, can be considered a reliable reversal signal, which what it happened here, as the market afterward reversed the trend and went up. This is the end of this lecture, and in the next lecture I will discuss using channels as with the trend signal, and you will learn how channels can be used in trading trend continuation in addition to trend reversal setups.